And welcome to the Trading Bell. So much has been happening in the markets, and we just want to have a view from the asset management side of things. And we have a conversation with Avocap asset managers, and I have the team here. I have the two co-founders. I have Monica Mwaniki, co-founder and CEO, and Wilson Wariari, co-founder and CIO. They're going to help us to understand what's happening really on the global side of things, on the macros, here locally as well, and what else are they doing as Avocap to especially help investors in their investments journeys. Welcome to the Trading Bell. It's good to see you, ladies and gentlemen.
Thank you. Thank you.
Glad to be here at Avocap offices.
Karibu sana.
Let me first of all start by endearing our viewers on who Avocap is and what you do, and then from then we can dive into the conversations about what's happening in the world of investments. Let me start with you, Monica.
Thank you. Thank you so much. And just to tell you about Avocap, we are a fund management company that is trying to bring a different view around investing in funds. And this is to mean that we have a wealth management focus. We are looking at how do we help investors, even at a personal capacity, or at a group level, or at a family level, at a business level. How do you use the CIS platform to enrich your portfolio, to grow it, to ensure that you're not losing value? You realize that this capital market is a space where every other day it's growing, more products are coming up, sophisticated products that require specialized skills, yet investors may feel inadequate to perform some of this research and be able to identify where the opportunities are. But that's where we come in and help them, not just to give them advisory, but to also execute for them. This is our second year in operation, and we've been able to give quite good returns to investors, and I can say that we are looking forward to a long journey with our investors.
I love that.
Yes.
Good returns are good things for investors. And Wilson, let me bring you in as well. And I'd like to start with you from the end of looking at how the environment has been, especially from the global perspective, and probably you could also tell us what's happening around us as well. Over to you.
At the macro level, this year, looking at the global markets, it's been a year of uncertainty. From the beginning of the year, mostly led by tariffs and the expectations of what tariffs will mean. The market, even as we started the year, there was now the talk of the inauguration of the new president in the United States, and his push towards tariffs and what that would mean to the global markets. We saw that being implemented from Feb to April, when we had now the universal tariffs. So that ratcheted the markets a bit. But then there was a pause on the same, gave a 90-day reprieve to the global markets. And what you have seen is that we have seen that cyclicity in the market this year. Market has been reacting to these new policy directions and what tariffs will mean to the markets. And most of what we have been looking at is inflation. Because all this means is that, one, access to markets. Will the countries that have tariffs have been imposed on their products, will they still manage to access these markets? And US is one of the largest markets, consumer markets for a lot of producers across the globe. So you still have access to that market. So that's one. But then on the other side, from a US perspective, is what does that mean for inflation? And we really see ourselves back to the 2022 levels where we had skyrocketing inflationary fears that really dampened the market more then. So this year has been more of that policy shift. A lot has been moving. More policy action has happened this year than previously, probably the last few years. But then on the other hand, as we began the year, or from late last year, monetary policy was a key, I would say, was a key component of global markets. That has taken a bit of a backstage, because what we have seen is that some of the global central banks post their rate cuts in anticipation of trying to see what does this inflation mean, what will they impact in terms of their policies. So you've seen like the Fed has not cut rates since September last year. the expectation that they may cut twice before the end of the year.
Yeah.
What that means in terms of global capital flows.
Okay.
When you come to the local markets,
yeah.
It's been a great year on the macro front. One, when it comes to monetary policy, we've seen CBK continued to cut rates, and the markets responded. From your fixed income products, you've seen the yields really come down. Then on the other side, that also supported investor move to risky assets or equity assets. So you've seen the rally that was there towards the end of last year in the equities market has continued this year in the local markets. Something else that has been quite supportive is the growth in foreign currency reserves. We've seen it go to an all-time high of $11 billion. So it's been a great year on the macro policies, okay, on the local macro policy or supporting monetary policy. On the fiscal side, we have seen the main issue has always been paid-in bills. We have seen the government take a bit of action to repay the paid-in bills. Especially they have started on the construction sector, which had the highest level of paid-in bills. We've seen securitization of levies on oil, and that has gone to pay from the latest cabinet dispatch. We saw 40% of the paid-in bills have been paid. They have authorized payment of another 40%. So that one also now basically supports monetary flows or flow of capital within the economy. So it's been a great period, a bit mixed on the global scale, uncertainty on the global scale, a bit more stability in the local markets. And so now from here is now the transmission mechanism. Because at the end of it all, it's whether it gets to the end consumer.
You're right.
So I think that's the stage we are in now.
That's a good one. Monica, let me bring you in as well. Still in the same breath, because we have also seen at the exchange especially, there's been a great rally, especially on the equity markets, the bonds market, and I'm sure there's a perspective that has been built by Wilson as well. What can we make of it?
As you have had the CIO explain, that for sure both the monetary and the fiscal policies have really supported the market. And we have seen a shift between the two asset classes. These are the bonds and the equities. And then again, I'll bring another aspect of post-COVID. This is the time now we are starting to feel good recoveries in the market, and most of the stocks have reacted to this. Something like the lowering of the interest rates definitely has spurred and supported business when it comes to lower rates of lending. Markets responding to. We've seen growth in the market, and the demand by consumers is also there. So what we have seen is stocks, especially when you look at across the range, both the banking, the FCMGs, and all that, they've really grown, and we have seen a lot of activity. This year we've also seen a lot of clients jump onto this side of equity funds. We do have both fixed income funds and the equity funds. And we've seen investors now are more, their appetite has increased when it comes to equities. And I'm sure you, on your desk, you've seen a lot of activity on the stocks.
I think it's shift in settlements. Because as one, we coming from a period of really high interest rates the last 2-3 years. That incentivized a lot of clients who are out of the capital market to start looking at the capital markets again, especially buying bonds. But then as rates have been coming down, so investors now looking, okay, what's the next best alternative? Then they meet very highly discounted stock market. Market has been, even from a peer comparison, we are trading at very low multiples. So it's quite a discounted market. And so therefore investors were quick to jump in and take advantage of these discounts in the market. So that has seen a bit of a rally in the equities market. So it's been a bit of a sweet spot, if I may say so, especially for the equity investors this year. And
What's your forecast? I'm curious to know because we are very much excited as well. I mean, investors are happy. And I mean, it started off when we look at last year coming to this year as well. It's been going. Do we see this going on for quite some time in your own forecast?
There are two ways to look at it. One is investor participation.
Yeah.
I'll say there's still a lot of investor appetite. Still high retail participation and increasing retail participation in the market.
Yeah.
That will drive liquidity. Then on the other side is in terms of valuations.
Okay.
From a value point, yeah, we're still trading at good discounts.
Okay.
And so that means that there is still a leg room. There are a few things that I would say have been a bit of, and investors are probably waiting. This may be one of the most watched earnings season by a lot of investors.
Okay.
To see some of the things that have been, investors have been putting as, they have been there as hiccups to more market expansion.
Okay.
From non-performing loans and such, whether that risk has abated a bit.
Okay.
So yeah, but it's still trading at good discounts. So yes, there's still potential for more growth.
Yeah.
Monica, you have something?
Yes, the other point I would want to add is definitely, even as he's saying, maybe in the short term, we can be able to predict that we still have leg room.
Yeah.
But how can an investor be able to anchor themselves in the markets for the long term? Because
absolutely. In fact, you've just preempted my next question. Let's advise investors in waiting to know.
Because markets will have ups and downs.
Yeah.
That's the volatility. And this is where clients really lose out their capital. Because yes, some stocks, as we are saying, some bonds may be a good buy by themselves. But then when markets turn, investors are not on time to know when to exit that position and get on to the other one. And that's what we are bringing to the market, whereby we are saying that capital markets are good spaces to gain and build on wealth.
Yeah.
But then what's the strategy you're going to use so that you don't pour as you're adding,
That's true.
Yeah. So you want to ensure that what you have done, you've crystallized your wealth over time.
Yeah.
So at a fund management level, at Avocap, that's what we do. By actively watching these spaces, if it's like the equity funds, we have an active approach towards these stocks.
Yeah.
We take positions at the right time, exit at the right time.
Yeah.
Times we are waiting to see and then getting on to the next move. If it's like the fixed income side, you realize there's a lot of capital gains when it comes to active trading of these bonds. And that's what we've been doing with my team here to ensure that we are not just showing a rosy position when markets are really up, but even when they are down, there is what we are doing to preserve and to ensure that we don't erode the capital that they've gained.
I love that. Yeah. We shall come to advise retail because the NSE has an amazing, ambitious strategy to bring as many as possible. Yep. But it would be nice to hear from the people on the ground and what you see. Yep. But before then, still on matters investors, let's talk to the private investors, because a lot of people are trying to raise private capital for the sake of what we are seeing. And so maybe Wilson, I would bring you in. Let us know from your own perspective when it comes to private capital mobilization here in Africa. A lot of people say it's still hurdles. There's still a lot of that. We're seeing a bit of it happening. We had a bear ringing just the other day as well for almost the first, if I may say, that infrastructural bond that came up. So what are some innovative approaches from your end as Avocap that you think should be adopted so at least we can have quite a better move in this?
Also, one, it was a great move.
Yeah.
As you said, it was first in the market.
Yeah.
And it's basically trying to marshal capital within Africa.
Yeah.
And putting it directly towards that where it's needed.
Yeah.
Those infrastructure projects. There's still a bit of, I would say there's still a bit of huge gap that needs bridging in terms of bringing more participants within the marketplace itself. There's still a lot of private capital that's looking for room, investment room across the Africa region. And our capital markets, I would say we are in the a growth phase. Okay. And an important phase in marshalling this capital together, or bringing this capital together. And at times, it's bringing them from the known to the unknown.
Okay.
It's bringing them from, taking a stake in this company. So how do you increase that participation within that space itself, the retail participation in the market itself? How do we bring more, do you incentivize even more businesses to list and, and build? And once you build, we continuously build on these on the private capital participation within the capital space itself. And then from there now, these products or these innovations that are coming, such as now the asset-backed securities or asset-backed infrastructure securities, then becomes easier for us or for investors to have, or for the market to have that conversation with the private capital, that indeed, having invested in equities and then in bonds, there's another way or there's another layer that you can add towards your portfolio building. So I think a lot is still being done. We had the Africa Links Exchange program. It's linking currently 9 major exchanges across Africa. More participation on that, probably more visibility on how that works, and allowing, basically creating capital mobility. That's the most important thing. The more easy it is to get capital moving across the African jurisdictions, the easier it will be now to actually marshal a lot of this capital towards these innovative products. So a lot, I would say a lot of legwork has been done. Still looking forward to more growth in this industry, but I believe it's an opportunity for the markets.
All right. And Monica, maybe you'll build on that through this question. You work a lot with DFIs. You're talking about family offices as well as institutional investors. So from your perspective, what do these partnerships bring to the table, and what are the keys to maintaining trust and alignment among such varied players?
As you have heard that the most important thing now at this point is really mobilizing the capital or bringing the capital back to the market. And that's what the key stakeholders you've said bring to the market and to the space, whereby you're finding family offices, for example, looking for home for the capital that they have built. So at the market level, at the capital markets level, this is where we are seeing them now starting to tap in and come in and be able to make a good return on
the investment side.
I think it's more of helping them in portfolio building. You have these, and I think it speaks to what Avocap we are trying to achieve here. We are trying to be a financial warehouse, a magnet that pulls all kinds of investors, from your sophisticated investors, the DFIs, to the family offices. And you're trying to create them, create for them structures in how best to deploy capital within the capital market space itself. So balancing from their equities investments, their bond portfolios, their alternative investments, helping them get access to some of these alternative investments products. Then also helping them now build both the short and the long, the medium and to long term portfolios that meets their liquidity requirements, that meets the diverse needs of most of these family offices, and even the structural, I would say, goals that especially the DFIs comes with. So for us at Avocap, that's why we created this platform. We have them, we create this structure for them to help deploy the capital that they are looking to deploy in the marketplace itself. We help them have, for family offices, we have help them have their own private investment management companies, helping them form these and have this structure from where they can centrally manage, whether it's local, regional, or global investments. And what we are seeing with this is that we are seeing investors now open up on more of the capital they have, some that is even offshore, and now they're more even willing to bring it back to the country, because now they feel there's a structure that can absorb or can help them basically disseminate these capital, the same that they can get from the other regions. So I think it's a great thing. Seen quite great absorption or great interest from clients on that.
Excellent. Excellent. I love that. As we come to a close, two things, but let me start with the retail investors. As I alluded, we are quite ambitious at the exchange as well, looking forward to this. And I wanted to bring in the question, are there some shifts that you think should happen? Whether it's policy, whether it's regulatory, whatever that you may feel like, but more with the focus of ensuring we have, as you've said, more market participation, especially on the retail side of things. I don't know who's going to start with that. Is it you, Monica? Oh, well, go ahead. I think Wilson is ready.
So, as I've said, great things are happening at the exchange level, at the capital markets level, in terms of policy shifts and in terms of product innovation. I think we can still deepen more some of these products that have been launched by increasing retail participation more. I think I'm a supporter of direct market access to the derivatives, especially to the local retail markets. I think we still need a platform that can help investors participate in this. Because on one side, we are trying to create liquidity pools. We are trying to show investors that there is a marketplace here. And all of this capital that they try to, I would say, offshore it, take it to other jurisdictions to participate in those markets. There is a space for it here. There are products for them here. You can buy, just to mention a few, Safaricom futures here. You can buy equity futures here, TCB futures here, NCBA, EABL futures here. You can actively buy them and sell on same day. So you can actively participate, for those. We have a lot of a great trading community in the retail space that try to get into all these global markets. There's a space for it here, but there's no access route. So that's why the direct market access or platforms that gives that access are important. That's on one side. On the other side is we need to continuously increase our pool of investable products. I'm glad that the cabinet has approved the listing of Kenya Pipeline.
You're right.
I think it will be a big thing.
It's a big.
It could be the biggest IPO we have had since 2008 Safaricom. That will bring a lot of retail participation and interest in the NSE. But you don't need to stop there.
We need to keep moving.
We need to keep moving. We need to bring more products because I think we also have a bit of there's more excess capital that would want to come that probably doesn't have a room to absorb it. So NSE can take advantage of this. I think the one way to go about it is depository receipts. I'm a great believer that the moment you see the first or second listing of a depository receipts here, so basically attracting other companies outside the nation to come and list through the NSE. That will increase our market products. And you'll see a lot of capital flows, both from the local and even from the global markets. It's basically positioning Nairobi into what we have always, all our forefathers have always dreamed of, as a center of capital flows in Africa, and as this international financial center of capital flows in Africa. So I think those are some of the two things that
those are quite a number.
It's a good one that can be done to basically help, grow our market.
Monica, you'll have the last word, even as you tell us the future of what you're seeing here at Avocap. So go ahead.
All right. Just to add on to the shifts, the other shift now need to come to the investor. It will come from the investor, whereby the shift of wealth or investments need to start shifting from the traditional modes of investing to the capital markets platform, where there are more liquid, more accessible opportunities. So that's the other shift. What's next to Avocap? For Avocap, we have now grounded ourselves in the market. We are now a familiar name, and our products still remain not very well understood on what their use is in an investor's portfolio. So in our next phase, what we are doing is ensuring that investors understand the products we have. We have a very beautiful nest of funds that can offer a variety of solutions in an investor's portfolio. So this is what we are working on right now, just to ensure that investors understand that there is a lot of opportunity and a way to ensure that they are optimizing their portfolios by working with Avocap. Yes.
All right, there you have it. That's a good pitch. I love it. And thank you so much, Wilson. Thank you so much, Monica, for being on the Trading Bell.
Thank you so much for having us.
Yeah, I don't know what are your thoughts, but probably you might be thinking like me. Sometimes when you want to fly high, go with the young ones, the 2-year-old and move in. That has been the conversation on just how the landscape has been in the investments right here on the Trading Bell with Avocap Asset Managers, the team that leads this entire institution. Thank you so much for your time. I'll leave you now with the markets.